Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 5 o'clock in New York on Wednesday, 27th day of January 2016. This is Trending Markets. We are looking at a Dow Jones Industrial Average off again in triple digits, closing off about 222 points lower on the day, 1.38% drop in price, below 16,000 at 15,944. Of course, S&P's also taking it on the chin today. You can see they are off almost a full percentage, down 18 points at 1878. That, of course, is vis-a-vis the E-mini. Now, interestingly enough, as we looked at these markets today, as they were trading and after statements made by the Federal Reserve, that is when we actually saw this market under pressure, because I had been under the belief that we could actually see not only gold run to the upside, but equities run to the upside if we had some sort of calming, favorable statement by the Fed. We're looking at a daily chart, standard candlestick format, Standard & Poor's E-mini. And here's the one thing that jumps out at me. If we look at the last couple of trading days, we are as congested as can be. We have absolutely alternating color, red, green, down day, green, up day. Here we have 2 consecutive days, and really that's the longest period of time that you've gotten with any kind of an uptrend that has stayed intact, has been 2 days. And so what we are seeing is really a market in flux, really waiting for the data points to feel comfortable to either find a bottom and begin to trade back up to these record highs, or to go under considerably more pressure. And that, of course, would happen if the S&P's breached 1831 on a closing basis. The reason I say closing basis, we have seen it on an intraday basis trade well below that, but recoup during the day. Now, the reason that number is so important is when we look at the August meltdown that occurred in the Standard & Poor's and U.S. equities markets, this was the low that it hit before finding support. So that is genuinely one of the reasons that we are looking at that price point with so much concern. The other markets that are interesting today that are definitely worth noting is crude oil, because crude oil, again, up 2% on the day, second day in a row. You can see that on this daily chart here. But the real question that we have been looking at and trying to ascertain is that once these markets traded to a new low, and of course that low was roughly at $25 per barrel. Let me go ahead and get my pointer up here. My question was whether or not that could be a technical point in which we would find support. You can see that low right in here. You can also see a series of bottoms starting really in 2002 into 2003, where the market came to this price point, roughly $25, and then began to move back up. So whether or not we're looking at simply a technical bounce before going to lower pricing or some sort of a bottom in play, that's something we will determine as this market unfolds. The other market that I do want to take a look at today is the US dollar. US dollar down slightly, off about 0.4%, but the key to me is that it's trading at 99. And the reason that's important to me is when we look at various levels that we have earmarked as support as well as resistance in this market, 98.90. So that is roughly 99, and that is currently where the market is hit. And I am looking at this particular level as a level that should, if this market is going to begin to move back up, if the dollar is going to get stronger over time, this is the level that I would look to see support. Resistance, of course, on the dollar index just above 100. Euro dollar, that's on the bottom, roughly 109. That is our resistance level. Market trading at 108.90. Now, I almost wanted to take a stab at the market, and I was really looking at this market from the long side prior to any kind of FOMC meeting announcement. But once the announcement came, especially on the really short-term studies, let's go ahead, in fact, and pull one up this being a 15-minute. But following the statements that were made, the market was trading roughly at around 19, so right in this area here. And if you recall from yesterday's show, this was that key level that I needed to see an effective close above. So we actually did trade above this, but that quickly faltered and we then went under pressure. This could have been a great indication for a short, but we did sit on the sidelines, but we did also double up on our gold positions. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another Trending Markets. Bye-bye.